The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You've got the phone. Make the call 800-306-1990, 800-306-1990. And every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. They don't tell us APR, points paid, points received, just the locked rates with consumers across 42% of all mortgage transactions nationwide. Looks like a lot of red on the screen from yesterday. I like the red on the screen. That means rates were down yesterday. May not be the case today. We'll look at it in a minute. 30-year conforming loans, 7.072. We've got jumbo loans. Those were up 7.436. 30-year FHA, 6.953. 30-year USDA, 6.976, and the best loan on the market for those that earned it, 6.709. And as I share every morning, if you want the earliest update, our commentary on what's going on in the markets, rsrmarketminute.com, rsrmarketminute.com. Just go to the site, register. We'll send that out to you free every morning. We try and get them out as early as we can. Let's see what the markets are doing today. 10-year Treasury down 3 basis points, 4.08. The S&P 500, that's pretty flat. It's only up 0.73. Mortgage-backed securities are up 17 basis points. That means the bond market, the rates are down a little bit, just a little bit. Why is this happening? Well, I told you a little bit of it in the last sector, but what happens today doesn't matter. And it's going to be fascinating to see what goes on because going into a long weekend, and the biggest economic report of the week comes out tomorrow. So all of the traders are going to be gone by about 10 o'clock Eastern time. Well, we get the employment report comes out at 8:30 Eastern time, 5:30 our time here on the West Coast. And that's going to drive the market, but it's going to be a lot of volatility tomorrow because traders are all gone. Today we got the personal consumption expenditures report. That's the Fed's favorite measure of inflation. Showed that inflation rose 0.2% in July after rising 0.2% in June. Now, multiply that out times 12. Does that come out to 2.4, if my math is correct? So if we held that 0.2 straight throughout, we'd be at the Fed, pretty much at the Fed's target rate. But no, they don't want to look at that. The reading was exactly as expected in pretty low monthly readings year over year. The index increased from 3% to 3.3 just because of how they're replacing older numbers or last 12 months ago numbers. So it's all in line. But the core rate, that's what the Fed focuses on. They take out food and energy because there's so many people that don't need food and energy. But that's what they take out anyway. Rose 0.2% last month, increased from 4.1 to 4.2. Also expected a slight bump higher, but again, it was all due to the comparisons from last year being low. Now, remember, the gas prices, oil prices are all up, and they take that out, but they don't take it out of the cost of getting the eggs to the supermarket because there's going to be a fuel surcharge, and those eggs are going to cost more. Following the PCE release, CNBC had 2 analysts from Stifel and Morning Consult, and it was like a session from Jim Carrey and Jeff Daniels. The Stifel analyst said that because inflation has reversed higher on a year-over-year basis, the Fed needs to hike more. Have we talked about this before?
Such an idiot. Such an
Unbelievable
idiot.
How these people
Such
just
an
have
idiot.
no clue on what's going on. But, we have to deal with them anyway. But she doesn't understand that yearly increase only increased because of the comparisons. If you look at the last 5 months of readings, which really gives you a more current and relevant trend for what's happening with inflation, annualize it, we're at 2.2%. If you did the same exercise with core PCE, you would get an inflation rate of 3.2%. The analysts from Morning Consult said they believe inflation will remain high because home prices are moving higher again this year, and they are a huge component of inflation. Home prices are never contemplated in the inflation reports. Instead, they look at rents and imputed rents or owner's equivalent rent. It's amazing how these people just don't know what the heck's going on. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. make the call 800-306-1990. 800-306-1990.